and hi everyone. Do you guys know what exactly is tax audit? The Inland Revenue Board audit is an inspection conducted on a company and those who are eligible to pay taxes. These inspections are made in detail and systematically on the financial records. It is to ensure that the company complies with the general principles of accounting, management policies, rules and procedures set by the Inland Revenue Board. It is also to review the amount of tax payments made by an organization. Meanwhile, the tax agent is a representative for a taxpayer. They are the mediator between the entrepreneurs and the Inland Revenue Board. They are responsible in providing the best tax services to taxpayers to help them to carry out their responsibilities to the country. However, don't be fooled by individuals who pretend to be tax agents but don't have any qualifications, like this case of last year, where an entrepreneur lost 382,500 ringgit, where he was duped by a man who provided tax services. Not only taxpayers have problems, but there are also few problems faced by tax agents regarding tax audit.
Wrong conceptions of business expenses versus private expenses and revenue expenses versus the capital expenditures are one of problems faced by tax agents regarding tax audit. Wrong conceptions of those can make it difficult for the tax agent to identify and calculate the tax deductible. This is because the client records all expenses in the same record under expenses, while not expenses for the same object or purpose. All expenses should be recorded under the correct account. For example, if they buy raw materials, it should be recorded under business expenses. Or another example is if having a renovations on production plan, it is placed under capital expenditures. To qualify for a tax deduction, not all accounting expenditures are tax deductible. The cost must be undertaken entirely and only for the purpose of earning the income, and they must not be explicitly rejected for tax deduction under the Act. Business expenses are costs incurred in ordinary expenses in business. So, business expenses is one of the parts in the income statement which is deducted from the revenue to arrive at the company's taxable net income. Besides from that, the cost must not be capital in character, meaning they must be undertaken with the intention of providing long-term advantages to the company. Only then it may be claimed as a tax deduction. All of these things need technical knowledge, which leads to debates and difference among taxpayers when the tax agent presents the computations and explanations during the tax filing process. So, Income Tax Act 1967 discuss guidelines for business expenses. In Lembaga Hasil Dalam Negeri LHDN says taxable profits include all forms of profits normally derived from various projects such as advertising, equipment insurance, and vehicle expenses. Besides that, a bank's account are not separate for business transactions are also one of the problem faced by the tax agent regarding tax audit. Many sole entrepreneurs and self-employed people have experienced these kinds of problems when they use their personal bank accounts to do business and causing private transactions to get mixed up. It is difficult for the tax agent and accountant to separate the transactions in order to produce business accounts if the records are not made. It's possible that some earnings will go unreported, and one of the important things that clients need to know if they have a business, they need to set up a special bank account to be used for business transactions only. It is because to avoid the occurrence of omissions and miscalculations to be taxed. By isolating the bank account in the first place, the client do not have to worry about recalculating and relisting business or private expenses. Everything is already in the right place. And in addition to saving time and personal sanity, and it can have clean creditors and debtors and business only records to give to the bookkeeper and if audited by the tax agent. The importance of a separate business bank account can be used as evidence or proof to legitimate the business so that it is not misunderstood by the tax agent if regularly deducting more money than generated.
When incomplete, occur when an organization is not utilizing double entry bookkeeping, which is the recommended method of recording financial transaction. In its place, it is employing a less formal accounting system, such as a single entry system, in order to keep a track of a more condensed version of the information pertaining to its financial outcomes. It is conceivable to keep a cash basis income statement under a single entry accounting system, but it is not possible to keep a balance sheet. It is also conceivable for the administrators of a company to have an intention of utilizing a double entry bookkeeping system, despite the fact that the underlying accounting records are looking in their entirety. The risk that the Internal Revenue Service (IRS) will adjust the taxpayer tax assessment by disallowing as a deduction while imposing penalties exists in the event that tax audits leads to any inquiries or expenses with IRB officers requiring supporting documents and the taxpayers fail to provide them. It is recommended for a company to have suitable policies and procedures in place before making posteriorly tax. It is recommended for a company to have suitable policies and procedures in place before making posteriorly tax submissions. Many taxpayers are under the impression that the IRB will not discover revenue received in cash if it is not declared in the books as income received in cash. This could have some repercussion. For instance, in the unreported cash income was used to pay for some expenses. The books of account would need to reflect the origin of the cash used to make the payment. However, if the origin of the cash could not be determined, it is common practice to record the transaction in the books of account as advance from director. Aside from that, the IRB might utilize a technique known as the mean test to determine the undeclared cash revenue. The worth of a taxpayer's total net assets along with their monthly living expenditures are added together and compared against their annual income and any capital gain they may have. If the difference is significant and there is no documentation to back up the claim or provide an explanation for it, the difference will be viewed as unreported income.
Taxation can be an effective tool not just for revenue collection by the government but also to influence the desired growth for the economy. Here's how to overcome the problem faced by tax agents regarding these tax audits. The first question we ask new clients is whether they have unfiled tax returns from previous years. This is the first and the one of the most common barriers to effective tax resolution, so it needs to be addressed immediately. It's no surprise that constantly reminding clients to provide annual information during the tax season is a key pain point for more than half of our survey firms. Getting to the discovery phase of an annual return is still easily sidetracked by the administrative burden of chasing clients for information. Focus resources on improving auditing process and tool. Fast-moving growth creates opportunities for tax evasion and may encourage a culture of non-compliance. Auditing can not only detect and penalize evasion attempts but also signal a tax administration's attention to prioritize more aggressive enforcement. Ensure regular updates to the taxpayer registry. In many rapidly growing markets, it can be difficult to maintain an accurate central taxpayer registry as much as the economy is made up of informal and small-scale businesses, and tax authorities lack the external control necessary to ensure that such entities stay within the system.